Markus. Today is Wednesday, June the 10th, and this is episode 52. Now, the goal of this show is simple. I want to show you that trading can be simple and that you can do it. So, if you want practical tips, tricks, and strategies for your trading, as well as watching me as I grow small accounts into larger ones, then this show is for you. So, today we have a big day. First of all, today was the FOMC statement, or the FOMC meeting concluded, and we wanted to see what is happening. So we'll take a look at how markets reacted, and we're continuing our discussion about trading as a business. So today we're talking about trading and taxes. Now, before we get started, let's just make sure that we are good to go, that you can see me and hear me. If you can, do me a favor, leave a comment really quick or click on like. This way I know that we are ready to get started. And as always, what we are doing is talk about the markets in 5 minutes or less. Okay, let's jump right in. So here we see a 5-minute chart of the S&P. And as you can see right now, the S&P is around the unchanged mark. Why? What is happening today? Well, today the FOMC policy statement was released. So it was released in the afternoon and everybody was a little bit nervous going into today. So as you can see, this morning we opened up and immediately pulled lower. So this here, the vertical line that you see here, where we opened this morning and then we pulled lower. And you see it was super, super quiet ahead of the policy statement. Now, this was released, and as soon as it was released, markets jumped up. Why? Because in the policy statement, it says that the Fed sees rates near zero through 2022. So this basically means rates won't change. Interest rates will stay at this extremely low level until at least 2022. They also said, you know what, we will keep pumping money into the economy. So yes, we will still buy treasuries, we will buy mortgage-backed securities, and we will support the flow of credits to household and businesses. And you see, shortly after the statement was released, this is when Fed Chief Powell had a press conference. Now, this is where he had a few remarks here that traders didn't like. And this is what's happening. So he basically said, you know what? A full recovery is unlikely until consumers feel confident, and this might take a while. And everybody thought, whoa, what are you talking about? I thought that we already have a full recovery, because if we look back here at daily charts, right, we see that the S&P 500 here is close to a full recovery. It's positive for the year, and we're close to make new all-time highs. The Dow is also on its way to recovery, and the Nasdaq, oh my gosh, this is on fire, making new all-time highs. Yesterday we topped 10,000 for the first time ever, and today Nasdaq is just marching higher. So this is where, of course, traders got a little bit nervous if you're looking back at a 5-minute chart here and saying, whoa, wait, what do you say? We were not yet recovering, because I thought that we were recovered. But this is where right now traders are digesting it, so we're going right back, and you see pretty choppy until the around the unchanged mark. I do believe that we will see a stronger reaction tomorrow when we see what the rest of the world thinks about this. Anyhow, so this is what's going on in the indices. Now, let me talk about a few stocks that caught my attention here today and also yesterday. One of the stocks that caught my attention was Chesapeake. And I know that in the previous Coffee with Markus, somebody asked about it and said, oh my gosh, what do you think about it? Look at this. It is going higher and higher. I mean, it went from $13 up to all the way to $75. So holy moly, what is going on here? And I said, well, whatever goes up that quickly, parabolic moves must come down. Do you remember us talking about it? And sure enough, here's what happened, crash and burn. There's a few other stocks that do the same thing, Hertz. And I mean, like Chesapeake, Hertz is also a bankruptcy candidate. And Hertz was just surging from 86 cents here all the way up to above $6. But then it is crashing and burning here right now. So what is happening? Well, I don't know why, but for some odd reason, I found this article that Robinhood traders, of all traders, right, are piling into Hertz, JCPenney, and other bankruptcy stock despite the massive risk. So we have a lot of small traders, because see, most people who have a Robinhood account, recently read a stats there, that most people have around a $2,000 account. And this is where we see a massive influx there. In fact, apparently there's even a website that is called Robin Track. There it is, which monitors how many Robinhood users are holding a particular stock. I didn't even know that this is public knowledge. Apparently it is, right? So a massive surge in ownership. And oh boy, I believe today and yesterday, some of these people got hurt. You know me, I mean, I rely on the PowerX optimizer to find the best stocks and options to trade. That's the software that I personally use. And this I've been able to grow a small $20,000 account pretty substantially thus far. So, I mean, I rely rather on this. Okay, 20 seconds left. What else is happening? Well, in the same way as we had Hertz and Chesapeake rallying up and then crashing, we have the same in the airlines. So American Airlines went all the way up, parabolic moves, and now crashing and burning. You see, this is where it goes back to trade what you see, not what you think, right? And apparently, there's a bunch of people right now who traded what they thought, and they are getting hurt today. Okay, our timer is up. Anyhow, this is what is happening in the market. So what can we expect for the remainder of the week? Well, everybody was waiting on today's statement, and today's statement didn't show any surprises, and this is what traders were looking for. As long as there are no surprises, I think we will drift higher. I mean, we see it today. The Nasdaq is just making new all-time highs. The Nasdaq is up almost 2%. Look at this, 1.7%. Again, Dow and S&P going back and forth around the unchanged mark, so a little bit lagging here, the tech index. But that's what's happening. Okay, so good to see you here. Hey, by the way, do me a favor. If this is your first time here, if you're new to the show, type in new, because I'm just curious. If you're here for the first time, by the way, I'm Markus Heitkoetter. And again, in this show, I give you tips, tricks around trading. Today, we're going to talk about trading and taxes, because many of you who are watching the show, I know, are already making money with trading. So we want to make sure that you know what to do then when you're making a lot of money. What impact does it have on your taxes? Okay, need to have a sip of coffee. So good to see you here. And yeah, Randy says it. So Fed kept the interest rates the same, but banks have upped their rates. Yeah, right now it's really literally supply and demand, because there's many people right now looking for loans, right? Because money is cheap. And yeah, surprisingly, banks are jacking up their rates a little bit. Let's see if they can get away with it, or if there's more pressure that they have to lower it again. Definitely super interesting. Raja says it. Robin Hood, steal from the rich, give to the poor. Yeah, I'm not a big fan of Robinhood. You know what? I have actually done a video about Robinhood and my opinion on it. And again, it's just my opinion. So if you want to check it out, it's here on my channel. Good. Lindsay received a mug as well. Okay, good. Very good. Loved it. Really happy. Perfect. Okay, so let's move on. Let's talk about... Rob also says, love my new Mac. Let's talk about trading and taxes here. Good. Let me actually prepare a few things, because we will also record this segment here. I think it is super important that you know what to expect when trading. Okay, so doing this. Cool. All right. So let's talk about trading and taxes. So this is the second installment in our series, Trading is a Business. In our first installment, we talked about the 7 things that you need to start trading. So let's do a quick recap here. Let me bring it up on the screen so that you remember it. We talked about, here we go, how to start a successful trading business. You do need a charting software. You do need a broker. You do need a trading strategy, a computer. I recommend having a second monitor. There's a few newsletters that I recommend. And then, of course, we have to talk about trading and taxes. Now, all of this that you see here on the screen is what we did last time. So right now, we want to jump in and talk about trading and taxes. Okay, so it's actually more fun than it sounds, because I know taxes, we have to pay taxes. There are some really cool advantages when the IRS recognize your business as a business, your trading business as a business. Now, first of all, full disclosure, I am not an accountant, and I'm in no way qualified to give you any legal advice or money saving advice. This is my opinion. This is what I've experienced. I'll give you some resources, and I'll also, at the end of this session, I will give you some resources where you can talk to professionals who know what they're doing. Anyhow, here are the advantages. When you do have a business, when your trading is recognized as a business, you can deduct expenses from your trading income. Now, what are expenses that you can deduct? You can deduct expenses for your home office because you're working for somewhere, right? You can deduct expenses for education. So if you have invested in education, it is possible to deduct this. Now, you can also deduct startup expenses that you have for your business. So there's a few more things that you can deduct. For example, you can deduct organization expenses. And by this, I mean, for example, the cost of forming an LLC. We'll talk about it. Do you need an LLC or not? We will talk about this here in a few moments. But I just want to show you what all is possible when the IRS recognizes you as a business. Okay, so then you have so-called tangible property expense. What the heck does this mean? This means, for example, your computer, which could be a laptop, your monitor, and any other thing that you need for your trading business, right? So computer and monitor is the most common here. Now, here's the other cool thing. Like every other business, you can actually deduct expenses of seminars. And if you have to travel to these seminars, travel expenses can be deductible. Again, there's rules and regulations that are applying. I am not a CPA. Please talk to your CPA or talk to the resources that I'm giving you towards the end of this show here after we are through with the video. Okay, what else can you deduct? For example, market data. You know, when you're signing up, for example, for TradingView, you can sign up for market data. It's really not that expensive, but if you're paying $10, $15, $20, $60 a month, depending on what market data you're subscribing to, this is definitely deductible. What else? Stock borrowing fees. So when you're shorting a stock, you're borrowing a stock and your broker is charging you a fee. Now, it's not a whole lot because especially right now, interest rates are low. So, but there is a fee and you can deduct this from your income. What else? For example, margin interest. If you have a margin account and you pay interest on this, again, it's not a whole lot. It's probably just a few dollars, but you can deduct it. So as you can see, there are many advantages of having a trading business. So the key question here right now is what qualifies for a trading business? Because think about it this way. Let's say that you're starting trading and you are not yet as profitable as you want to be, or you start growing a small account and you're making, I don't know, maybe $10,000, $15,000, $20,000 a year. And let's say that your expenses are higher, than your income, then you have a loss in this trading entity. When you have an entity, it is on a Schedule K, I believe, and you can actually offset this with your regular income. So it's really, really cool. That's why I say trading and taxes, it is fun if you know what you're doing and if you are recognized by the IRS as a trader. So this is called having the trader tax status. Let's talk about this. So how do you obtain the trader tax status? And I'm putting this in quotation mark because this is basically means, okay, what is needed so that the IRS recognizes you as a trader? Okay, so there is actually a statement from the IRS. I will post the link here in the document. And if you want, I will make this document here available for you. But let me just quickly post it here. So you have to obtain trader tax status. Oops. Let's see. Edit and match style. Here we go. Perfect. So let's take a look at some of the highlights that are really, really important. So you see here under traders, special rules apply if you're a trader in securities, which means that you're in the business of buying and selling securities, stocks or options, for your own account. The law, the IRS law, considers this to be a business, even though a trader doesn't maintain an inventory and doesn't have customers. However, there are some rules. So to be engaged in the business as a trader of securities, you must meet all of the following conditions. Number one, you must seek to profit from daily market movements in the price of securities and not from dividends. So you have to be an active trader, buying and selling. Dividend investors don't count. Your activity must be substantial, and you must carry on the activity with continuity and regularity. Now, as you can see, this is as vague as it possibly gets, right? I mean, can you be any more vague? So this is where the IRS gives you a clarification. And in a moment, I will give you a few guidelines that I found when I did some research of what is considered your trading activity be substantial, because obviously this year thus far does not help us at all. So this is where the IRS says, well, we are considering the following facts and circumstances when we are determining if your activity in securities is a trading business. The typical holding period. So obviously, as a trader, it should be as short as possible. Now, for me personally, for my trading, I typically hold a stock or an option between 5 and 25 days. And there are even some times when I'm holding it less than a week. So that definitely qualifies as a trader. As said, in a moment, I will give you some more guidelines. But let's take a look at this. The frequency or dollar amount of your trades throughout the year, the extent to which you pursue the activity to produce an income or a livelihood, and the amount of time you devote to the activity. So as you can see, there's a few things. And this is where I said, okay, what the heck does it mean? I mean, this is still as vague as possible. So I did some research on the website, and I came across one of the websites. It's called greentradertext.com. It's a website maintained by Robert Greene. And again, he's just saying, okay, how to qualify for this. And here are some golden rules, and I want to write these down. So there was a court case. In 2015, so only 5 years ago. And this court case is being cited by many CPAs to determine whether you, in the eyes of the IRS, should qualify as a trading business. And let's talk about all these different components that we had here. Let's break it down here. And again, I'll give you a resource here in a little bit where you can talk to a professional. Obviously, I'm not a professional. I'm showing you what I know about it, right? And this is my knowledge. And please, personal opinion here. Seek the advice from a professional. But let's talk about this. So first of all, regarding volume. So regarding volume, it seems that a golden rule there is 720 trades per year. So let's write this down. So in order to qualify for trader tax status, again, the IRS says you must have a certain amount of volume. So this means 700 total trades per year or 60 per month. And you might say, oh my gosh, I can't have 60 trades per month. That is a whole lot. Well, hold on, not so fast. First of all, here is how a trade is defined. A trade is one trade is to buy a stock or an option, and then another trade, one trade, is to sell it again. So let me just see here, clear my screen so that you see it. So basically, you know that every transaction consists of a buy and a sell, right? Or the other way around. So as soon as you trade, it's already two trades in the eyes of the IRS. So this means if you're doing 60 per month, it actually means that you're having only 30 round turns. Now, here's the other cool thing. So for the IRS, in this case, it was determined that scaling in and out does count. Okay, again, this is my research that I've done here. Please do your own research. But this means, as an example, if you buy 100 shares and then you sell later on 50 shares at a certain price, and then you sell another 50 shares. So this is how you're closing your position. This counts as 3 trades. So as you can see, it is not that difficult to get these 60 trades per month that is here. Again, it's guidelines. Please keep in mind, all of this is guidelines. So I'll write this down here as well. These are not rules. The IRS will take a look at you. But since there was a court case, this is based on the court case that happened in 2015. I do believe that these guidelines are pretty good. Okay, so this is in terms of volume. Let's see what else is needed. Okay, frequency. So execute trades on close to 4 days per week. Okay, so this here, another golden rule that we want to write down. So the frequency of trading 4 days per week. Now, again, not saying that it is super easy to obtain trader tech status, but when you do, as you can see, you have lots of advantages. So it does make sense. Okay, let's see. What other guidelines do we have here? So holding period. In the court case, the IRS said the average holding period must be 31 days or less. Okay, good. So we already know this. Holding period, 31 days or less. Now, before we continue, there's a few things, but let me ask you this. Thus far, has this been helpful? Because if it is, do me a favor and give me a quick thumbs up. This way, I know that this is helpful, and I'll go through the rest of the guidelines here and then give you the resource where you can get more information or advice from a professional. I just want to make sure that I'm not boring you here in this video. So if you like it thus far, give me a quick thumbs up. All right, very cool. So let's see what else is there. Again, holding period of 31 days, no problem for me at all, because this is where I personally hold most stocks between 5 and 25 days, and options. I mean, so we are good to go here. Okay, so here is the other thing, right? I mean, trades full-time or part-time. So this is something which I think is a little bit of a gray area, but we should definitely consider it, that you are at least considered a part-time trader. Now, here is an important thing. Here's one important thing where you see part-time and money-losing traders face more IRS scrutiny, and individuals face more scrutiny than entity traders. So what does this mean, right? It means that you should be profitable, and it seems that having an entity, and an entity means an LLC, seems to be beneficial. Okay, so based on that's what Robert Greene writes here. So again, hours, spends more than 4 hours a day, almost every market day on this. Okay, well, for me, that's not a problem. I love watching the markets. You might love watching the markets, and you might actually spend 4 hours a day. Again, these are guidelines. Keep this in mind. It's guidelines. I will give you a resource here to a professional who can help you and see what is happening in your situation. But let's just say, so in terms of volume, in terms of frequency, in terms of holding period, right, and in terms of hours, here you have some rough guidelines. Okay, so the last two guidelines that we have here is okay, let's actually write these down. So as you can see, the intention, let's go back here, shifting this a little bit. So has intention to be a full-time trader, right? So that's the idea. I mean, don't treat this as a hobby, because if you treat it as a hobby, then the IRS probably says, well, there's more or less a hobby here. So that's very important. The operations, that's the other thing. That's super, super important. And we talked about this yesterday. So let me just copy it over here from this website, from Robert Greene's website. So operations has significant business equipment, education, business service, and a home office. What does it mean? Well, yesterday in the first part of the video here, and we'll link to the first part here in the description, we talked about the 6 things that you need. Yes, you should have a professional software. Yes, you should have a professional charting software. Yes, you should have education. As you see, these are the guidelines. If you're jumping into the markets without any education, without having any investment, any significant investment done in the business, the IRS says, well, you're probably just a hobby trader. So it does make sense to invest money into your business. Now, here's the last thing regarding account size, right? So account size, it says, has a material account size. And again, what has material account size? Here, the recommendation is that you have at least a $15,000 account. Now, what does it mean? Does it mean that you should not trade if you have less? No, it simply means that if you have less than $15,000, you probably do not qualify just yet for what they call the trader tax status. Now, I see that there's a lot of questions. I'll answer the questions here in a moment, but I want to make sure that I'm also giving you a resource where you get more information. So is this making sense before I give you the resource? Again, if this is helpful, give me a quick thumbs up or a like, and then I'll show you where you get more information. Now, obviously, as you have just seen, I get a lot of information from this website, which is called Green Trader Tax. And Green Trader Tax is a great company. They are offering consultations. One of the challenges here is, or not challenges, just something to be aware of. When you book a consultation with Robert Greene or one of his associates, where you can see, do you qualify for trader tax status? Should you elect M2M accounting, whatever it is? Can you benefit from an entity? You can book it, and I believe it is like $265, $270 actually. So this might be a great resource to do it. However, there's also another company, it's called Traders Accounting, where you can schedule a free consultation. And if you're interested in scheduling a free consultation, go to rockwelltrading.com/taxes. I'll write down the link here right underneath the video so that you can just click the link. When you click on rockwelltrading.com/taxes, it brings you to this website where you can have a free half-hour consultation. And during these 30 minutes, again, it's free, you will discover how an entity can save you thousands, what are possible deductions, trader tax status versus investor status, and so on and so on. Now, very, very important, as you can see in red, there are a few qualifications. You need to meet the following requirements in order to sign up for a consult, ready to trade out of a business in the next 2 to 4 weeks. So this means that you should be close to meeting these requirements. If you haven't even started trading yet, don't book a consultation. It doesn't benefit you at all, right? So, but if you are already trading, if you are already making money, if you already have an account that is at least $15,000 or more, if you have spent significant amounts of money on education, on business services, on a home office, on software, on a computer, then it does make sense. So again, do not apply for this free consultation. Really, they won't like you if you're not ready and if you don't meet these criteria. Also, if you already have a business, don't ask them for a consultation. They help you to get set up. Okay, so if you have a business, there's probably your existing CPA can help you with this. And right now, you must have either U.S. citizenship and or U.S. residency, because these guys, they know their stuff here in the United States. So they might not know the rules in your country, wherever you're from, whether you're watching us from Canada or whether you're watching me from Australia, from Europe, from Asia, from Africa, from South America, from wherever over the world you are watching this, right? So if you are in the US, this is for you. Again, go to rockwelltrading.com/taxes. That brings you automatically here to the free half-hour consultation. So, long story short, trading and taxes can be fun. Again, if you qualify as a trader, and if your trading qualifies as a business, then you can deduct a lot of expenses, which is really cool. And here you have the exact rules. I have the link here. So that you can read what it means. And there are some guidelines based on a court case. So if you want, I will post a link here or go to rockwelltrading.com/coffee and I'll be happy to send you this document here. The team is probably printing it up and making it into a PDF, and then we'll send you the document whenever it's ready. Okay, hope this helps. If you found this video helpful, there's a few other videos popping up on the screen right now. Just click on any of these videos that you like best, and I'll see you in the next video. All right. Good. So we got this out of the way. This will be a standalone video. Hopefully it was only 10 minutes, 10, 15 minutes. That's hopefully the sweet spot. And I see that there are a lot of questions. And I'll see if I can answer through as many questions here as possible. So let's see. So I want to make sure that we're talking mainly right now about trading and taxes. So there are a few questions. Jackie is asking, can you explain your trading strategy using technical indicators? I'll be happy to. In fact, the easiest way to do this is to get my book, The PowerX Strategy. This is where I wrote down all the rules, including for trading options. So it's for trading stocks and options. On Amazon, it is $25, but I'll be happy to send you a free copy if you want. All I ask is that you cover shipping and handling, which is $4.95. So if you would like to have a copy, there's a link right underneath the video where you can click on it. Just look for PowerX Strategy book, and I'll be happy to send you a copy for $4.95. That is probably the easiest way to learn about my strategy, and also the least expensive way here. Okay. So Luz is asking, what if you are trading under a self-directed IRA? Okay, that is a great question. I'm going to jump back on the screen here in just a moment, because it seems that, hold on, let me just make sure that I'm going back to where I was. So I'm going back to Robert Greene's website. So this is where I did my research. Because here's also what doesn't qualify. So what does not qualify is trading automated trading systems unless you have developed them. So if you didn't develop the auto trading system, if you bought a robot, that does not count. Trade copying services do not count. This means if somebody is sending you a trade, if somebody is sending you a newsletter and say, buy this stock at this price, that is considered a trade copying service and does not qualify. Now, on the other hand, if you're getting a software like the PowerX Optimizer and you're getting 8 choices a day and then you make a decision which of these stocks you want to trade, that is not a trade copying service. This, by the way, people ask me all the time, do you offer a trade copying service? As you know, we do have a newsletter. It's called the Power Alerts, where we issue trades. But if you only follow the Power Alerts, then you will not qualify for trader tax status, because that is considered trading copying. Now, obviously, engaging a money manager. So if you hire somebody to manage your money, you cannot qualify for trader tax status. And here's the other thing: trading retirement funds, right? So again, talk to a professional. Go to rockwelltrading.com/taxes. Talk to the professionals there when you are ready, and they can tell you this. I believe a self-directed IRA might count, again, based on my personal opinion. But again, talk to a professional. But that is a really, really good question. Okay. So Doug says, let me just see if I can bring some questions here on the screen. And oh, by the way, before we continue here, because there's some great questions about selling shares, how many dollars of tax deduction per year per average, and I want to do this, but I also see that there's a lot of great feedback, and I know that several of you left some feedback on Google, left some feedback on SiteJabber, left some feedback on the Better Business Bureau, on Yelp, and I really appreciate this, and it's part of the show that I want to recognize you. So if you see your name on the screen here, please send your mailing address to nicole@rockwelltrading.com, because I want to send you a small thank you for taking the time to share your experience. So Tim, Ram, Jody, Stephen, just taking a quick sip. If you see your name here, Stephen left a review on Google and Trustpilot. Really appreciate it. Odie, Viomesh, let's see, and Dashyant. Okay, you get the idea. Barry, I really appreciate it. Contact nicole@rockwelltrading.com. Tell her your mailing address, and I'll send you a small thank you in the mail. So Todd, appreciate it. Zeke, you guys are awesome. So please contact nicole@rockwelltrading.com. Right now, you see it here. And send her your mailing address, and I'll be happy to send you a small thank you. I appreciate it. Okay. Anyhow, So we got this out of the way. And if you would like to have today's show notes as well as the PDF that I've been talking about, go to rockwelltrading.com/coffee. Leave your name and email address. We'll send you reminders whenever I go live. And as soon as the team has made it into a nice PDF, my chicken scratch here, we will include it and we'll send it out to you. So expect an email in the next couple of days. So just go to rockwelltrading.com/coffee. Okay. So let's see. Doug says, so selling 1,000 shares of a position took 6 transactions today. That's 10% of the monthly requirement, what I'd consider in one trade. But seems that the IRS considers it 6. So here's the deal. If these are, Doug, these are split fills, I don't think that they count. This would count as one trade. However, let's say you bought 1,000 shares of Tesla at $600. Right? And you know, right now Tesla is trading above $1,000. So let's say you sold 200 shares when Tesla was trading at $700. You sold another 200 shares. So this is right now 3 transactions. Buy 1,000, sell 200, when Tesla was at 800 shares. Then you sold another 200 when Tesla was trading at $900. And then you sold the remainder today when it was trading at $1,000. So this would qualify, even though you would count it as one trade, but for the IRS, it would count as 5 trades. Now, again, I do believe that split fills, meaning that you say, I want to sell 1,000 shares right now. And your broker says, well, we have to split it up into 200, 200, 300, and it's all happening on the same day. I do believe that this counts as one trade. But again, I'm not the expert. This is why go to rockwelltrading.com/taxes or go to Robert Green's website at greentradertax.com. They are great resources. They might help you with this. But that's a great question. Okay. So David is asking, how many dollars of a tax deduction per year on average? 10,000, 20,000 or more, is it really worth it? Well, think about this. How much money are you investing in your trading business, right? So I don't know what kind of home office you have, how luxurious your home office is. I don't know how much money you invest in trading education. I know that you're part of our mastermind. So, I mean, the mastermind is considered trading education. And I know that you invested a substantial amount there. When you purchase the software, the PowerX Optimizer, right? So just think about it this way. All of this adds up. And also, when you are in an entity, it is not counted as regular income. It is counted as income from a business, which, I mean, you know the rules and regulations better around this, is taxed differently. So you're being taxed as a business. So it really depends. And this is why I hate to say, oh, yeah, you will easily save $10,000. But usually if you're taking your trading business seriously and if you have substantial investments in software, in education, in travel, right? Whatever it might be, in computers, in monitors, in equipment, in subscriptions, then it definitely makes sense. Usually, I mean, rule of thumb, in order to form an entity and talk to a professional who can help you with this, it'll probably cost you anywhere between $1,000 to $1,500. Rule of thumb, again, subject to change. Your situation might be different, but think about it this way. And I do believe that you can save at least $1,000 to $1,500 by having a business. Also, when you're keeping a trading log, you'll be fine in terms of record keeping. So I believe, my personal opinion, if you take your trading seriously, it makes sense to at least talk to a professional about this. Anyhow, great question here. Tristan, yeah, very good topic. I know that many of you asked about it, so I wanted to make sure that I'm doing it. And Monica says, if you're trading an IRA account, none of these things apply. Monica, you see, this is the point. I mean, if you're trading an IRA account, you're already trading tax-free. You already have substantial tax benefits, right? And this is where the IRS says, you cannot double dip, which I think is fair enough. So this is where, Monica, it really makes sense to talk to a professional to see if in your particular situation, it makes more sense to keep trading in a retirement account or to convert this into possibly a self-directed, or maybe take it out of the retirement account, take the penalty and then save money. I mean, there's so many nuances. So I wouldn't make this as a general statement. Yes, you're right. When you're in a retirement account, you cannot save taxes twice. You already have tax benefits here. But good comment here. So talk to a professional whether it makes sense for you or not. So Raja is asking, are losses deductible? Well, here's how your income is derived. When trading is a business, you make money and you lose money, right? And your net profits. So therefore, yes, losses are deductible. Now, again, losses from trading, not from investing. Remember the difference? IRS clearly defines it and says trading is 31 days or less. Investing is 31 days or more. So, Raja, if you have losses from active trading, for example, if you have taken a position last week and you realized a loss today, that, of course, is deductible from your income, which is your profitable trade. So you do have profitable trades and you do have losing trades, right? And when you have losing trades, then you can deduct this from the profitable trades. And again, it has to be trades, meaning 31 days or less. Good. Sama is asking, are the PowerX alerts still available for subscriptions? It is Power Alerts. It is slightly different. Do me a favor, contact the office. They can explain the difference to you of what that is. So the Power Alerts are not based. They are not based on the PowerX strategy. They're different. For the PowerX strategy, you have the software, the PowerX Optimizer, but feel free to contact the office or email them at support@rockwelltrading.com and they can help you out. Okay. Good. Let's see. So I know that there's a few more questions that I want to answer here. One of them is, should buying education be in the same tax year? You see, I mean, you saw the criteria, right? So the idea is that you plan to really make money with this business and invest substantial amounts. So it should be, I think a rule of thumb is for up to 12 months after you start your trading business, or after you invest in your education, you have, I believe, up to 12 months, right, to really start it. So if you invest in education today, I don't necessarily think that you have to start your trading business this year. I believe, and again, my opinion, that you can start it next year, and then your trading education would be considered startup expense. But again, go to rockwelltrading.com/taxes, talk to the guys at Traders Accounting, go to greentradertax.com. If you want, pay for a consultation there. It's $270. It's probably money well spent. And if you go to rockwelltrading.com/taxes, you can qualify for a free consultation if you meet the criteria that I mentioned earlier. Okay. So, great question. T-Trade Now says, how is the wash sale rule IRS affect day traders? There are also rules, and usually it's more beneficial. Again, this is where you find more information there. I'm not that familiar. I do have an entity for my trading. By the way, my entity is called Trade Confident LLC. So that's my name. And it does make sense. Paul is asking, what about mark-to-market designation and writing off losses? Again, when you are a trader, important, not an investor. So if you have losses for an investment that you did last year, if let's say you bought Hertz last year, Carl Icahn, right? Classic example. Carl Icahn invested in Hertz and now months later or years later has realized a 2 billion loss or something like this. Now, again, he has different tax treatments, possibly, right? But if this is you, if you would have done it, you could not deduct that loss. It has to be from active trading, which is 31 days or less, which is what I do and what I teach here. Great. Okay. Jody's asking, do you know if there is an education limit per year? Not that I'm aware of. I have not heard about an education limit here. Again, the rule is that you're investing substantial amounts in your business. So to prove that this, we talked about it yesterday. It's like opening a food trailer or food truck, right? I mean, in Austin, they're super popular here. So if you want to open a food truck, you cannot start with just a grill standing on the side of the road and a table, right? And maybe selling sodas out out of an ice chest, right? So you have to make some investment. And the same here. If you're not making any investment in your trading business, the IRS is probably not recognizing it as a business here. Okay. So Ray's asking, how do you get a copy of the successful business plan that you did on Monday? The best thing to go is go to rockwelltrading.com/coffee. This is where we get your email, or you can contact the office, right? So if you contact the office, you can call or text 512-337-1885 or send an email at support.rockwelltrading.com. They have it for you. They'll be happy to email it to you. Just ask and we will make sure. So the idea here is right now I'm talking to my team about putting all these show notes in one place so that you have all the resources that I'm giving you in these sessions all available in one place. So they will be labeled probably that it says, okay, Coffee with Markus, where Markus talked about trading and taxes. Here is the supporting document. Here's where Markus talked about a business plan. Here's the supporting document. So the team is currently building it. Give them a few more days. And if you go to rockwelltrading.com/coffee, put your name and email on the list there. I promise as soon as we have it available, we'll email it out to you. And we'll also add this to the descriptions here. Okay, fantastic. Well, I have to wrap up here today. Time flies when you're having fun, right? I mean, this is just amazing. Again, if this is your first time here and you enjoyed the show, consider subscribing to this channel and always feel free to share this video with anybody who you think might benefit from it. So feel free to email it to other people. Feel free to share it on Facebook if you want. Share. I mean, the more people know about the good stuff and that trading actually can be simple, the better it is, right? Because you always tell me how much money you're making with trading, and that makes me really, really happy. So I'm super excited about this when you're making thousands of dollars. So be a good neighbor and share it with your friends and neighbors. Okay, anyhow, have a great rest of the day. If you want, we will meet here again on Friday at 3:30 Eastern Time. I'm live Monday, Wednesday, and Fridays, 3:30 Eastern Time, and in between, we're scheduling a lot of videos that are here on this channel. Just feel free right now. I mean, since we're wrapping up, feel free to browse this channel. There's probably tons of videos that might be beneficial for you. Okay, I'll see you very soon. Take care, everybody.